Danny, you're on mute, buddy.
Danny, you're muted.
Amazing. All right, welcome back to another episode or live stream actually from the 0xResearch crew. We're working through the tech issues today. It's always fun out here. Joined by a bit of a fun crew today, I would say. We're kind of mixing up the usual folks on the stream, but we've got James Kristoff, the renowned Wolfswap junior dev, incredible, frequent podcast listener and Telegram enjoyer of 0xResearch. We got Westy, apparently Chill House Treasury co-founder, but also from the Blockworks data team. And then we've got Smack from Compound joining today, and Tolks, apparently now also a Wolfswap senior dev.
We've been hiring.
How are we doing today, guys? I think it's kind of chill vibes.
Yeah, just on in my house.
It's all good. Yeah, we're heading into the 4th of July weekend. Coins are out. Things are good. Nobody's bearish. Everything's good. We're always hiring.
Okay. We're actually about to do our Series A, so we should connect offline on that.
Yeah,
you can be a strategic partner.
Yeah, thanks.
All right, cool. Love it. Glad to have you guys on. I think it should be a fun one today. There's a lot. I think, we've been talking about it in the Telegram. Everyone's been in there yapping about the events of the past, I want to say, week, 2 weeks. One of the big ones right now is like crypto Treasury Mania. We actually talked about this a lot at Permissionless. All the pods, all the pod hosts got together. Pete Rizzo was talking about Bitcoin Treasury Co's, like they're going to get even more absurd from here, which I actually kind of agree with that view, and they have been getting more absurd. But I don't know. I want some thoughts here, like if it's doomerism, if it's like this is just natural, like someone does a Treasury Co, the price, pumps, people see that, and then they replicate it ad nauseum. Or is there something else going on here?
I mean, I can see why there's sort of a frenzy around this, that everyone and their mother are raising money to make a treasury company, because from the point of view of the issuer of the equity and the buyer of these tokens, it makes all the sense in the world. If these things continue to trade at a premium, and you can both raise money and then generate the ability to issue more shares at a premium, buy more of the token, and especially if you also own the token beforehand, before you do like your TWAP, it makes all the sense in the world why you would spin up a treasury company, as long as the market continues to value these treasury companies at far higher than NAV.
It's a good Ponzi.
It's like a really, yeah, I can see why people like the Ponzi. And so, yeah, I mean, yeah, on the panel you guys had, you definitely had a range of perspectives. Rizzo is definitely on the of course, we're just going to see 1 million of these. Every public company is going to own 5,000 Bitcoin, and we're going to ride off into the sunset. But my point of view is yes, it's super attractive, and we're going to see more of these. But at what point does the momentum stop? Because at that point you run out. The treasury company are the biggest buyers right now of Bitcoin, of any single group of investors. So as soon as you see the money start to run out, what does that do to the price of Bitcoin and potentially alts? I don't know, but that's kind of my high level thoughts.
It's also kind of funny where on one of those panels, I don't know who it was talking about like, yeah, we're gonna see these things pop up in like every market that has every place that has capital markets. We're gonna see it all over the world, and it's like, yeah, maybe true, but it's happening in the deepest capital markets first. So like, does it really like it doesn't move the needle if I don't know, XYZ 100th largest capital market country has somebody go public there who's buying Bitcoin? It's like, okay, it's definitely diminishing returns, and it's kind of like feels a little bit like the euthanasia roller coaster in some respects. So yeah, it's a good sync, but
that's what I was gonna say.
Yeah.
Yeah,
I guess we see it in two different ways. I'll go ahead, Tolks.
No, I was just gonna say it's getting to the point where it's like every other meta that we've had in crypto. Like just thinking back to we talked about it maybe like a month ago, and it's obviously snowballed more from there. And like it's not a problem in a sense, but it's just like I said, every other meta in crypto that we've seen, like there's something that like MicroStrategy that takes off, like the first AI like agentic coin that goes to like 500 million, and then everybody just starts spinning one up, and that it can go on for depending on the market environment, go on for 3 months, 6 months, a year. But yeah, just it's very similar to every other meta that we've seen. Same thing with perp dexes and clobs and prediction markets. Like there's one success and everybody just kind of piles into the thing that's successful.
Have you guys listened to Jim Chanos talk at all about this stuff?
No,
Yeah,
I haven't, but
it's the odd lot.
yeah, go ahead.
Yeah, I was just gonna say, like his whole thing is like he's on the exact same side of the trade as Sailor, right? Like he's short the common and long Bitcoin. So it's just funny to me, like when you think of like the trade construction of how this stuff works, you'd naturally think like people in the crypto space who are way more bullish BTC would not be kind of cheerleading the other side of the trade, right? Where these treasuries are selling the common into the market. I just don't know eventually who the natural one. I don't know who the buyer is for it now. I guess maybe I'm not clicked in enough with like the kind of the initial offerings, like who this stuff is being sold into. Do you guys have any idea of like who's buying this stuff up, be it like retail or institutional, like what the breakdown is?
I'm not sure on the exact breakdown or who the marginal buyer would be. I don't know. I think it's kind of just speculative capital, and there's, I guess, like, the argument was always kind of that the instruments to express like crypto bullishness were kind of lacking in TradFi, and as every day passes, and especially with ETFs live, like that argument, it doesn't really make sense to me. But these things, they still volume and volatility, and that's kind of what they feed off of. I don't know exactly where that constant demand is coming from, but yeah, it's coming from somewhere for now.
Folks, basically, like, no more questions like this.
Yeah, you're gonna scare people.
No, it's funny. Like I also think like one thing that I've always thought about with the treasury stuff is the impact of like activist hedge fund investors, and because I think they're eventually going to come into this space. Like if you're one of these, shitco's that just launched, a few weeks ago, and you're trading like super rich to your book value, like why are you not just like dumping into the market in mass? Like just try to do it over the weekend, like completely dilute the hell out of your company. I wonder how long they're going to be allowed to kind of trade at a premium before existing people in existing market participants just start trying to force them to dilute even more and more to bring down to call it like a closer book value.
If it does feel though on I don't necessarily think that it's unique to crypto in that sense. When you look at kind of like some of the TradFi stuff, like the names that are outperforming most over call it like this year or the last couple of weeks is, I would say maybe not like the most fundamentally sound businesses in the world. It's a lot of kind of like, let's like even TradFi is like, let's go as far out the risk curve as we can with some of the companies that are outperforming. So I don't know. It is definitely symptomatic of something going on in like general markets, and I don't. It doesn't mean it's like a top, but it also, I don't know. It's an interesting data point that you're seeing like a flood of these things now.
Yeah.
What
I think that's a good part, or good point.
What do you
Go
guys
ahead, Wesley.
think are the signals of like when this thing turns over? Is like the only thing you should be looking at, like the average like value to NAV, and like are those compressing over time? Like to me, that is like the number one metric I'm paying attention to. But I don't know if you guys are thinking about, okay, when does this thing start to like roll over?
I almost feel like one of the things that I've been looking at mostly is you see the theme here has almost been like with meme coin launches where, you know, maybe the rumblings of one of these raises happens, you know, a company gets bought out or some sort of acquisition happens, but the announcement of like, hey, we raised 200 million so that we could buy Bitcoin and put it in the treasury, like when that announcement comes out, it's like, okay, instant pop in the share price of that thing, like the next day or after hours or pre-market or what have you. And those pops have not been as strong as they were, 10 treasury co's ago. Obviously they're still happening, right? Like, raising 500 million to buy Bitcoin for like a company that used to be valued at like a $20 million market cap. Like there's just sort of like a natural thing that's going to happen there. But I think that's one of the things that I've been looking at is like, if that return, that immediate return there starts to continually like erode, then it takes away a lot of that, I think, value to keep running these up.
I think it's also becoming way more difficult to I don't know, get visibility into like Bitcoin or BTC price, for example. Like in the past, we had, I don't know, it was like you could look at things like funding and open interest and kind of like internals. You could look at like whale activity when this was like a smaller asset class. Even like MicroStrategy, you could look at kind of the NAV premium. But I don't know. I think like these treasury companies on top of a bunch of other things, add like almost like a layer of obfuscation of like where you can feel comfortable about, I don't know, developing your own opinion on like where do you think the price is going. Like it was just way easier, or I should say, yeah, way easier to, I don't know, build like a view where you could look at some of these things. Now I think there's just another layer of, obfuscation of like, okay, maybe it's less clear to me whether like what this means on shorter time horizons.
I also just like
even like the on-chain data. Just like the on-chain data, like you said, Smack, like there's a lot of stuff you used to be able to look at, and just like to the overall conversation we're talking about, there was a report that some people were running with last night about I think it was Asia-based company that was buying, I want to say it was 5,000 BTC. No, I think it was 10 to 12,000. But then in the fine print, like you can see that like it hits the news wire as a company acquiring a billion BTC, and then you scroll down in the article like, and it says that it's a common agreement between essentially somebody who already holds that to transfer it to this company. And like it's just the obfuscation that you're talking about, Smack. Like these things, they started off again, like it goes back to just every other meta in crypto. Like they start out, MicroStrategy is pretty pure and clean, and then the things, it just spirals, and the market runs with that until it can't. And one of the things we talked about a lot last week when discussing this just at the conference was like, you don't even necessarily need like these people to turn into sellers, but like how much of the run up the past 3 months, like what if they just don't have the same amount of capital to buy? Like it doesn't even need to be that they're sellers. It's just that they aren't, consistent bids in the market anymore.
I was just gonna say, like, you guys know my thoughts. I'm obviously biased. I think a lot of this stuff is pretty stupid. I can somewhat understand at least like the ideological view of people that say, hey, they have a traditional operating company, and whatever, they're macro doomers, whatever, they want to have a portion of their balance sheet in BTC. like fine. I disagree with it, but I think it's at least a little like logically consistent if they have an operating company. Like how would you guys steelman the question of like what is the purpose of a BTC treasury company? Like I really haven't heard it articulated to me. Like to me, the purpose is to just increase the price of BTC. But like as an actual company, what's the point? Like what does it do? Like when you get to the end of the road when things have equilibrated and like it's basically trading at book value, like what's the point? What's it do? Does anyone know?
The denominator is worthless, brother.
No, but I'm serious. Like, what is the point of it? Like, once the shares have been sold and it's been diluted properly, and it's just trading at, it's got 100 million of BTC in its balance sheet and it's worth 100 million, common. Like, what is the point? What does it do? And I guess it's elegant insofar as there's no debt. So like, I'm not concerned about someone cracking this thing open and they need to repay debt with it. I just don't know what happens. Like, do we just have a bunch of zombie SPVs in the future that hold a bunch of Bitcoin and do nothing? I don't know.
Yeah, maybe. Like, the historical argument was like there's a market arbitrage opportunity, like for maybe funds or investors who can't, natively purchase these things, and so this maybe opens that up for them. But if you expand your view out into the future, where maybe that's not a limitation for anybody anymore, then and they're all trading like at NAV or like at par, it's like what? Just go buy the underlying. There's no point.
Yeah, I think that argument is like totally gone now. Like if for any capital market participant, like globally, it's trivially easy for you to buy Bitcoin, right? Like it's just, I think that argument's totally done. It's totally accessible.
I mean, if I'm trying to steal, man, it would be basically somewhat of a levered bet on Bitcoin, and you're taking the volatility of the stock and the equity and being able to convert that to more underlying Bitcoin is like the idea. But yeah, if like you continue to get diluted over time, it's like, what is the value really? I don't know. It's kind of circular.
All right. I think we're tapped there. I thought that was a good conversation though. Another topic that I think's been all over the timeline, and people are ravenously discussing is stocks on chain. This is a big thing. Like multiple companies are jumping into this one at the same time, it seems. So there's like X stocks with backed finance or backed fi. That's like, I think partnered up with both Kraken and maybe also Robinhood. I'm not sure if that's the same or a different partnership there, but Kraken for sure. You can trade like these X stocks tickers on Solana, like via Radium Dex or just on chain essentially. So there's SpyX, Tesla X, etc. And they have some mechanism where they're backed 1-to-1 by the underlying, although there's not a lot of trading here, and it's like a few million a day. I think we've got the data on the site already on Blockworks, but there's like a few million a day already that's in trading volume on these things, and they're pretty volatile given that. But the conversation is very much, here's what I have a gripe about, and I guess I'd love people's takes and thoughts here, is like the conversation is very much centered around, okay, this is either the future of finance or it's worthless. And I personally, like, I have an opinion here, and I think it's somewhere in the middle, but I don't know. I've seen this conversation centered around like, this is amazing. It unlocks everything like going forward in the future. And then the complete opposite, where people say like, no, this is a bad product because of XYZ reasons. It's a zero. What are your guys' general thoughts here on just like bringing equities on chain? Like general vibes. How do we think about it? What do the next few years look like coming out of this?
Is the reason people say it's a bad product mostly around like, oh, you don't actually have ownership of the equity, or like,
yeah, a combination of like, naturally it's lower liquidity than, typical exchanges. Like there's going to be volatility. You don't technically own the stock. All of those reasons. Yeah.
I think I'll probably, Danny, agree with you. I think it's directionally pretty cool. I don't think really groundbreaking. I think it's going to be very beneficial for people like gambling on chain. Right. I think that's a cool market. That's what we've seen, to your point, pretty low liquidity. to Smack's point, like I don't know, does anyone really care about if you own it indirectly through Robinhood or Kraken? Like ostensibly they're titling the stuff properly. So it doesn't really matter that you can't redeem SPY. Like who cares? Now, Danny, to your point of like in the future, I still think we're super, super far from like real money coming on chain. I mean, I don't want to like derail it too much, but also like traditional equity trading, we had this conversation before, I think actually works pretty well. And it's not clear to me what bringing it on chain really does. Now, for like people trading on Solana internationally, they want to trade SPY, like I get it, cool. Don't really know why a hedge fund wants to come onto Solana to trade, SPY. They could in the future, but yeah, I think I side with you. I think it's cool. I think it's an improvement. It's good. It's not the future of finance, but it's also not stupid.
As somebody who would like to never have to use a bank ever for anything, I think it's like directionally cool, but I also recognize I'm probably not like the mass market appeal. Like most people are totally comfortable being like, yeah, I'll just have a Fidelity and a Schwab and a Vanguard and also a Robinhood account and also this other thing. I would love to.
Point, sorry,
yeah,
good.
I would love to. Like, I personally would just. It'd be like I don't. Yeah, if I didn't have to do that stuff, and I could just kind of like own all my stuff on chain, I personally would prefer that. But I also like. I have like other like finance preferences that I know are not symbolic of like what the general population wants. So it's like it doesn't really matter what I want, and I also am probably more comfortable with synthetic assets versus cool. I know that Robinhood is has legal rights to whatever equity they're holding on behalf of me. But I don't know. I think like the more interesting stuff is maybe the things that don't currently trade on like public exchanges. And that kind of feels the ethos of that feels more aligned with like the crypto native user who's one, more speculative, two, kind of is like, oh, I want exposure to these things that I don't know, maybe I can't get exposure to today. And if you put it in a synthetic form, I don't care because directionally I feel as if I'm getting exposure to it. So like, yeah, that's interesting. I don't necessarily think that means the market gets massive for it. Yeah.
Yeah, I think that's a fair take. Like that's the other piece of this, right? So Vlad, Robinhood, and also Republic are both exploring products here where they're looking to open up like basically like a derivative or like a some kind of vehicle that lets you sort of trade the value of if it's OpenAI or if it's SpaceX or whatever private company's equity or stock via like a tokenized form of this thing. I agree with the points you made there. Like it seems directionally aligned with like the trader base today who just give me something that like maybe I can be early to and try to hit a 10x on. And maybe a bunch of those people like they're not going to look at the fundamentals. They're maybe not really thinking about like buying and holding something for 10-year time horizon. Like they just want to they know what SpaceX does and they see the rocket launches in the news and they're like, man, I want to like bid this thing. And I think it appeals to them. But I agree with that point that I don't know that that necessarily evolves into a massive market, but I don't think that it really has to either.
Yeah, the only other. Sorry, go ahead.
No, I was just gonna say, like to your point on debanking yourself. Like, if you were given the option, would you take all of your traditional assets and hold them in self custody? Like I'm of the view that I actually like as I'm in crypto for more and more time, I want to get less in cold storage because I hate it and it makes me feel like super, super uncomfortable. Like every incremental Bitcoin that I buy is, within my Fidelity account. Maybe I'm a heretic for saying that, but I hate self-custody and the idea of hoarding like my entire, net worth that's in traditional equities onto my ledger and, having pieces of paper across the world that access that just like terrifies me. And like I just know obviously 99.99% of the population's never gonna do that. So if you take that to the logical conclusion of like putting this stuff on chain, but it's still custodied at Robinhood or custodied at Coinbase, and you're not holding your own keys, then you're kind of right back in the same place as, you know, having it at Fidelity or Schwab, right?
Yeah, I think that's the way more attractive, like actual user experience for 99% of people for sure. Yeah, I don't disagree with you. Like I tell like all my friends and family, like you should not self-custody, because like the odds of you losing your keys is infinitely higher than like Coinbase going bankrupt or Robinhood going bankrupt and you like getting all your money stolen that way or lost that way.
Totally. Yeah. So I guess my point is just like if that's the end result and you're just trading stocks on Coinbase, you're kind of just trading stocks on Fidelity, and it seems to me like the same exact thing.
Yeah, the only reason I like said that it's directionally interesting, at least for me personally, is like cool if you do want like a world in which I can actually not deal with like Coinbase, is just like personally more interesting. And okay, if I can get exposure to traditional stuff or the synthetic version of them, and then like borrow against that the same way you could like borrow against, you know, your Vanguard account or something like that. Like that, it's just there's more flexibility for admittedly like a tiny group of people, which is why I'm like it doesn't necessarily move the needle.
Yeah. I mean, I would agree with everything you guys said. I mean, I do think that there is demand, just like since Robinhood launched that, like just various chats. Like I think there is more demand for it, like across the world than US based. But again, it goes back to what we're talking about with, you know, the treasury companies in a way where like if you kind of, you know, there's so many ways to buy pure BTC now. Like, but you know, for the rest of the world, like I can see there are people that are excited about getting exposure to US markets on chain. I do think the private market stuff, like it's definitely, I mean, we saw OpenAI push back a little bit against Robinhood's announcement, but that stuff to me is like much more exciting, especially as, I mean, we've seen more IPOs recently, mainly just crypto stuff, but like, you know, you have private companies that are reaching towards like trillion-dollar valuations. Like I think there's kind of some mutual benefit to the early employees there and to the crypto rails to kind of bring that early private stuff on chain. And it's infinitely more complex. Like there's plenty of stuff to work through there. But I'm much more excited about kind of the private stuff as there are more companies that are staying private longer.
But the other point I would make on that is like you saw this with like Circle, right? There was like a bunch of Circle OTC stuff, call it like 12 months ago. And not the entire world had access to be like, cool, I can buy like this Circle OTC at call it X dollars. But there were plenty of people, and I'm sure a lot of crypto people who had a view of, cool, I would for sure want to have bought that had I had the opportunity or known it existed. And so for them, I think that stuff is like, okay, cool. OpenAI pushes back and is like, you don't have the equity, blah, blah, blah. Like a world in which you have even like perps on these things or synthetic versions of them, people will say, cool, I directionally want to own Circle at X billion, even though it's private. And I think that it will go public in the next 18 months. And like, you have a view on that, you want to express it and you can't today. I think people will continue to have that feeling for privates.
Yeah. And I also think like just inherently how crypto works, like it's not necessarily good or bad, but like if I was an early employee of one of these companies, I would be begging to put it on chain because the speculative premium is probably raising the, you know, the valuation of what I hold to what maybe would be worth in the private market. I'd be like, hell yeah, put that on chain. Like maybe, you know, maybe it's only a couple 100 million or a billion, but like I don't know. Like you said, I mean, you know how crypto works, like the speculative nature can kind of just take over. I would be all for putting my private equity on chain.
Are you suggesting as an early employee at a company you would want to be hedging your internal exposure? Is this
No,
you?
no,
Okay.
never.
Just checking.
Never.
Just checking.
No, you'd want to get more long. He'd actually go 100x long on top of his holdings that are vesting. That's what I would do.
I would just be confident that like I don't know, like if you have OpenAI, like if you put it on chain tomorrow, whatever the private valuation is now, like I would very confidently bet that like the on-chain valuation would be higher. And like it doesn't necessarily mean that the off-chain valuation has to meet that, but like maybe there's a incremental 10, 20% increase, just because obviously it depends on, the liquidity and volume that are on chain. But like, if I was holding it off chain, I'd be pointing at the on chain market and be like, look, maybe it should actually be valued 10, 20% higher.
Yeah, I think I would agree with that take from the viewpoint that, like, I mean, I think Smack kind of mentioned it, but like, I think there's latent demand from just, your average retail investor who is not allowed or enabled to invest in any of these things today. And regardless of whether or not that would actually result in them making more money than they do in the public markets, like, I don't even think like that's not a factor in the decision making. It's literally just like, okay, I know what OpenAI is. Like AI super cycle, 2030, it's going to be the most valuable company in the world or whatever, whatever the thought or the narrative is. But like, yeah, I think there's a ton of people who would like throw caution to the wind and be like, yeah, let me get some exposure to this thing, regardless of what the actual, pricing of the privates are. And obviously if it's Robinhood, if it's Republic, like there's a ton of money in it for them. If you have a bunch of price insensitive people who are willing to just like eat a massive fee or a spread on a thing like this, as meme coin traders do on chain with like trading bots, for example, there's a ton of money to be made in a business like that. So I think it's sort of natural that they're going there. James, though, I want to get your takes here. Like, we've seen some of the back and forth. I think Tolk's mentioned like, OpenAI statement regarding this is not real equity. Like, you guys don't, we have the right of first refusal on transfer of shares and whatnot. What's like the downside here? There's clearly like a regulatory and like legal question mark here that these companies are stepping into.
Yeah, so like this stuff is super boring, arcane document stuff that governs private companies, right? So like the vast majority of, call it like the privates that you'd want access to, so like OpenAI, Tesla, they all have ROFRs, right? So that basically means if Danny owns SpaceX, he bought it years ago and he wants to sell it to Westy, Musk and the team has the right to buy it at that prevailing price instead of allowing him to do it. So right, obviously this matters in terms of if you care about the actual asset transferring over to you, which most people I think would if they think this thing is eventually going to go public. And I think it kind of segues to your point, Danny, of like, sure, you can put this stuff on chain, but it's going to trade in such a detached form compared to like what the actual price is that like, sure, people are going to want to speculate it. But my point to you, I said this to you before, is like, if that's the logic, why don't, and it's going to be so untethered from reality, then like, why don't like we just go on the pump fund and spin up like OpenAI coin, because it effectively is the same thing. Or you could even just incentivize market makers to spin up like a perps market, and that might actually trade even tighter, right? Just given the mechanics of how perps operate, versus like these ex OpenAI, like it's just there's nothing to make it trade anywhere remotely close to the equity of OpenAI, and there's not going to be any market maker that wants to come in and like attempt to arbitrage that, one, because it's just impossible, and two, there's not going to be enough money for it. So like it feels on the private side, it's a total delineation from like listed equities that we've kind of just created meme coins, which is fine. Yeah. It's not bad, right? Like it is, people want it, they can trade it. But like there was someone, I won't name who on Twitter was writing how like, oh, how did no one knew that these weren't actually equities? If you read the docs, they're like forward contracts and sales. And it's like, okay, fine. Yeah. Like if you think the average participant on like Jupiter is going to look into the docs and understand what they're actually buying, that's your prerogative. That's fine. Yeah, I don't know. I just don't really get what it does, but whatever.
Yeah. I agree with that. Like the average retail person, like they don't care if there's a right to anything here. It's like quite literally like, it give me the synthetic thing. I just want to like bet on this going up. But to your point, like, and I would agree to an extent here. And something that I thought was interesting actually is on OpenAI's tweet the other day or this morning or whenever that was. Elon Musk, his like outrage against Sam Altman or whatever is like continuing. He's like, you don't have real equity or whatever. I would be curious to see like, Elon Musk kind of is historically a little bit of like a fan of the people in some ways. So I don't know, you could have personalities who are open to exploring a market like this. And I wouldn't be surprised as well, like OpenAI, Stripe, like I mean, these are some of the most highly valued private companies in the world, right? Like in the hundreds of billions of dollars, like already. It wouldn't surprise me as well if like these guys have a ton of leverage, right? They're some of the most valuable. Of course, they're gonna, show their power and like flex their weight on that point. But there might be smaller, more overlooked private companies who might think like, oh yeah, man, like if we could have retail like bid up our privates on chain and like build some buzz around it. Maybe that would be like a positive for us.
Yeah,
I think there's
also
an angle there.
Don't forget, for a lot of these like large companies, like illiquidity is a feature, not a bug, right? Like Stripe is private not because they can't find a way to go public, but because it suits their needs to do so, right? So a lot of times they have a negative incentive to liquidize their equity and allow people to trade it.
Cool. No other big thoughts? Yeah, I think the big takeaway for me is just like I would expect, and I'm curious to see, because Vlad and I think even the Republic guys, they've hinted at this, but it sounds like there are maybe some companies who are actually interested in partnering up to do this. I think for the Robinhood like presentation that they did, it was like they have a wealthy investor who has equity in some of these things, and so maybe in that specific scenario of doing the open AI thing, maybe they're going to end up going to court over that, or there'll be a little bit of battle there. But for other companies who might actually be interested, I'll be curious to see if that materializes, and who announces that they're interested in opening a market.
I do wonder how much negative selection bias you get from stuff like that as well, right? There will definitely be companies who are like, oh, like, is there a way I can monetize this this like private equity that I hold that I don't actually think will ever materialize into something? But yeah, I guess that's a
I think WolfSwap is thinking about launching on X stocks. That's a very salient point.
Appreciate that. Yeah. Right after you raise.
Exactly.
Yeah.
That's just good business. Let's be real. Cool. Yeah, I think that's a great point. And honestly, I mean, there's probably already some of that bias in some of the online like angel platforms for retail that pop up, right? You're getting the last pickings of things that other people didn't want to invest in. So that's certainly going to be a factor as well. Smack, I want to lean into you a little bit though, and talk about the venture side of crypto right now. I'll preface this by saying, me and the crew, Bach and Carlos from the research team, we talked to John Charb last week at Permissionless. And one of the big takeaways from him that he was saying about the current things like deals that they were seeing and what people were raising for was the most active, or like the most interesting things, the most like new products and dev talent that they were seeing were working on prediction markets and launch pads. And my question to him was like, are we just in this sort of like bias loop again, where when a bunch of big L2s came out, then we went and raised 100 L2s, and then now with big Polymarket raise and a big pump fund raise, like now we're just going to spin out 100 more of these things. I'm curious your thoughts on like how VC for crypto is looking right now, like what sort of deals, what opportunities, and what's interesting.
Yeah, I think actually, I feel like I saw more prediction market pitches last summer, almost like leading into the it was probably last summer, and I think that was kind of like Polymarket. There was a bunch of interest there, but also I don't know, that felt like people were trying to viewed it as like, okay, here's like an event. And this is like a way that I can grab users quickly. And I think there was like just a lot of that happening last summer. So I feel like I haven't seen that many new prediction market things recently, personally, at least. One, I do think that it's still interesting. Like there's kind of this argument. People are always talking about Kalshi and Polymarket. I actually don't like, I used to use Polymarket a lot. I don't use it as much anymore. And I just kind of feel like both of those products are a little bit stale. So I'm maybe bearish though, like those two incumbents today. I think there's like more interesting stuff that you can do. And so like, I don't know. I don't think that world has been necessarily won. But yeah, I haven't seen too many of those. I think I've actually personally probably seen a bunch more. A lot of people are building kind of like mobile first stuff, which is, I think, exciting because to me, yeah, I mean, to me, just like we need mobile products. And app store has obviously always been an issue. PWAs are not good. Like, that's not a good user experience. It's kind of the default that people used after FriendTech, and everyone was like, "Oh, cool, I'll build a PWA," but it's just not the same as native apps. But I've seen, yeah, there's definitely a lot of people leaning into, I guess, what would become competing with Robinhood. It feels like on a longer term time horizon of like plugging into perp dexes and trying to be mobile first perps trading, which is directionally, I think, interesting. But again, it's kind of like devil in the details, and you really have to build like an awesome product, which crypto is not necessarily good at. That stuff, I don't know. I think that's cool because I think perps we're seeing are just going to become like a legalized product in the US as well. And they're offered elsewhere. And it's just a better product, in my opinion, and better instrument than what people use today to do the same thing. Like 0-day expiry options, or even options in general, is kind of like more suitable as a hedging instrument, not a like speculative thing for retail. So I think those are interesting. I think that's going to be like an insanely competitive space. I've seen a ton of things like that. I suspect that like a couple months from now, there'll be, 100x version of that as some of them start to take off and people use them and they're like, "Oh, this is cool, I should build this." But I think those teams probably are the ones doing it now, probably already have a head start. And then, yeah, I don't know. I think that's the dominant share of stuff I've seen. People are spending a ton of time on Hyperliquid, obviously, that ecosystem, trying to like build it out and see like, okay, what do we need here so that it's more than just the perp stacks. I think everybody's waiting for the core team or like some of the I don't know, the architecture changes to go live. So I don't know. There's a little bit of a wait and see on stuff getting built there, but a lot of people are spending time there for sure. That's maybe the two things I've seen personally over the last like 8 to 12 weeks.
What do you think valuation wise? That's what I was gonna ask. One about like kind of early stage valuation wise, kind of what you're seeing there, whether it kind of remains a little elevated or what that's looking like. And then two, like we see a lot of conversation nowadays with equities coming on chain and Circle IPOing, kind of like the equity versus token debate, and kind of how you guys think about that internally. If you have thoughts on those two, I'd love to hear them.
Yeah, I mean, I don't know, crypto pricing even at early stages always kind of I don't know, there's still a premium to like traditional venture, which yeah, it's like I see the stuff that kind of other people at the fund do that on the trad VC side, and it's kind of stark of like the team and how much they're raising. It's like, oh yeah, we're raising $1 million on 6 posts, and there's 2 people who've been working on like have PhDs and been working in this space for like 12 years. And then crypto is kind of like, yeah, a couple devs thought of this idea like 3 weeks ago. We're going to raise 3 on 30, and you're like, so yeah, that still exists. I mean, it's maybe not as extreme as it was a couple months ago, but yeah, I mean, the token equity thing is also, I don't know. It's never been. I mean, because we're investing at like pre-seed generally. We like the teams to like have an idea of whether a token makes sense or not, and not necessarily, hey, this is what the token will do, or it's like it's a little bit of like, generally, I think the token still gets a premium, but also people are thinking more about whether or not the things they're building need tokens, especially because like the trading bots, right? All of those businesses, like who knows how long you can keep clipping 1% on volume. It's kind of insane, but like they make real revenues and have sustained like user bases. So there's maybe a little bit of a loosening on that side of people being like, oh, actually you can build things where the equity is worth something. But it's still not like, I think that most people are still interested in tokens. For all the reasons that they've been probably overvalued over the last however many years.
Are you saying the L2 valuations, that we referenced a little bit ago to start this conversation? Are you saying those might have been wrong a couple years ago?
I would say we have too many L2s with no users. Yeah.
Yeah, we've continued down the from chain to apps now. Like I think that it's actually playing out to an extent where you don't just raise the L2 at a X billion valuation. Now it's you build an app that users use and you make money on. Like you mentioned the Telegram bots. Those guys are printing a lot of money. I will say this is something that gets talked about a lot, right? Is like how long can you keep clipping 1% fees on stuff? Maybe forever is my thought here. Like when you look at Coinbase or Robinhood, like the retail users that just like use the simple interface for these things, like I mean, they're paying massive spreads on their trades, even for like Bitcoin, for example. And like I think fundamentally these people just like they're not price sensitive to like paying that extra 1% when they just like want to hit the bid button. I guess I'd be curious for some takes here. Like obviously, some, professional, large institutions are not going to slam billions of dollars through a trading bot, but the retail like audience that they cater to, in my view, I don't think that they care.
I totally agree. Because you're throwing in like $200 and you either zero it or your expectation, however misguided, is that it's going to go up 2,000%, right? So I think they'd even pay more than 1% if they're even aware at all of how much they're paying, which they probably don't even think about.
Yeah, I mean, I would fully agree with that. Like, I think the trading bot stuff, like, I mean, personally, still, like, I mean, I don't spend too much time in the trenches nowadays, but like when I do, like, it's still personally for me, like, still through Photon, and that's because I don't know, I just got used to the interface, and like I know that the slippage and the fees like aren't great, but I mean, the stuff you're buying, like, it's not because you're trying to clip off 10 to 12%. Like you're trying, like James said, like you're trying to hit you know 1,000% or more. And so like that marginal, you know, some people, I don't know, I would say talking to people that trade on chain often, like it doesn't necessarily matter to them. They care more about speed than execution. Obviously that, there's kind of like a push and pull there. Like it depends on the valuation of the asset. But when you're talking like early stuff and just trading, kind of on chain generally, like it's much more about speed and easy UX UI than it is about execution. And I mean that goes to a certain limit. Like you can't, if somebody starts clipping 2.5, 3%, like people will start caring. But the 1%, like I think it's just kind of, I don't know, it's just kind of the cost of doing business in a way.
Yeah, I actually tend to agree with you for the on-chain stuff, and it's kind of funny too because like that was the right. All of Wall Street was joking about how Coinbase is, oh, they'll never, like, these spreads will compress, like these fees will compress, they can't possibly charge. And it's like, okay, well, it's 2025, they're still ripping retail's face off on execution, and people don't necessarily care.
Yeah, even on chain, I guess you kind of see this sophisticated actor thing play out where the mass like factory meme coin farmers, like, yeah, they're going to write up their own contracts and like have their own setup to where they're obviously not using trading bots to like launch, snipe, and dump like 50,000 coins a day. So obviously to them it matters, right? They're not going to pay an extra 1% so they can like mass farm new tokens and flip them from 5K to 20K market cap or 5K to 8K market cap, like whatever the number is, because they their margins are much thinner and they're just trying to eke out that little bit per swap. But yeah, for like average Joe who wants to buy bonk coin or whatever, like he's trying to hit the 10x, and the 1%, the 2%, it doesn't matter. I think that's a good point, Tolks. Like it would be very difficult for some, a new team to come in and say, yeah, we're doing 5% on swaps. I think the users would probably end up feeling that one, but to stay kind of where we are, and they've actually compressed a little bit. I think like net fees on a lot of these bots are down to like 50, 60, 70 bips now. So they've come down a little bit, but I guess the other factor there is it's like you're paying, 1% to pump fun, and then maybe you're paying 70 bips to Photon, and maybe you're paying, some other amount of bips to somebody else in between that stack. Like that's kind of what seemingly has been happening more so, is each individual layer has maybe been compressing a little bit, but we've been adding more layers, and people are kind of paying those, for the extra services, or like just for the speed and execution, or the extra pieces of the product that they like.
Do you think they're any of these things are durable beyond like shorter time horizon fee capture? When I think of like just thinking through like how this has evolved, right? You had Unibot, you had Banana Gun, you had like Photon, you have Axiom. All of these things go in waves where people are like, oh, I like using this one, I like using this one. And some users get sticky, like Tokes likes Photon, and so he still uses that. But yeah, I wonder, do any of you have a view on durability, or like whether or not these things can build out products beyond how they exist today? Or do you think they're all kind of destined to be good, almost like lifestyle-ish businesses where cool, if you're a couple founders and you can build this product and you can clip like tens of millions of fees over 6 to 12 months or something like that, and it's like, cool, yeah, that's an awesome product that made a shitload of money? Or do you think one of these or a version of this turns into like a more, I don't know, like full, like starts bolting on other products or services beyond just like a really good low latency bot?
Yeah, I think so. I think we're seeing like one step in that direction with what Axiom did, which was not, I mean, it's like revolutionary for meme coin bots, but they tossed in the hyperliquid perps in addition to the meme coin trading. That seems like an inevitable line of like add these additional, pieces and parts that retail traders are like, that this general audience likes to do. To me, like in my head, when I think about what that like future state couple years down the road, like, you bolt on a couple more trading or other products that are meaningful, it's like, it kind of like looks like what Robinhood's business is today, right? Like you can trade crypto there, you can do 0DTE options, like you can have your credit card on there. I don't know if like an Axiom or a trading bot, I'd say it's pretty murky to like say that you'd pick one of those guys today and be like, yeah, in the future they like will be a new fintech, but that definitely seems like the direction they're trending, is I would agree with that point.
Yeah, I mean, I would look at Axiom as a good example. I think they're all going to converge, and there's a lot of the same features they're going to add, and it makes sense as you play it out. It's like you start with your front end for like pump fund stuff, then you add the other launch pads, then you add perps, and then you say, oh, I have all the distribution, I'm gonna make my own launch pad, I'm gonna make my own perps, and like you just kind of like continuously add stuff. At a certain point, there's like only so much you can add, and you like, it definitely requires you to like always be on top of the ball of like what the degen crowd of money is doing. But yeah, I mean, they're all going to converge in the same things.
Yeah. I mean, you see it from even like Jupiter too. Like, I mean, they obviously have kind of a different core business, but like they're starting to expand into, the meme coin stuff. And I would honestly probably rather bet on a team or a platform like Jupiter expanding into what the bots do versus the opposite. And then as far as like sticky users, like, yeah, we've seen a ton of Axiom growth. But the other thing is why these things are so sticky now is there's not really airdrops anymore. That used to be, it's the same thing you see with, perp dexes, and it used to be mercenary capital that would shift from, one thing to the other to the other. But now it's kind of just like, well, nobody's really airdropping. So like, why don't I just stick with what I'm comfortable with? Is kind of what I think the kind of broad view on that would be. And that's why these, the kind of main three have remained pretty sticky.
Cool. Yeah, and I think maybe, I mean, we're maybe seeing the formation of like, you could end up seeing stock 0DTEs or like stock perps on chain as well. That might be like another product that gets knocked into the tool belt of these things. You know, you got X stocks, you've got, what's the, like Ostium, like you can go long short like SPY on there. They've got like some limited options, but you know, I could see similar to this view of like, you know, Robinhood has all these trading things, like, you know, trading bot could get that in the arsenal as well. Just another thing for people to gamble on at the same time as their memes and their crypto perps. Cool. Well,
speaking of stocks, just kind of maybe close like overall broad market, like some of the various chats I'm in, like people are more, I don't know, there's more talk about various stocks and options right now than there is alts and crypto market outside of obviously kind of BTC and hype, but like outside of that, like I'm just looking around, I'm like, what's going on here?
Yeah, I'll echo that. Like, I don't know if you guys have seen it as well, but I think there's definitely been like chatter of like the crypto to equity rotation, or like the alts to stocks rotation. And maybe part of that is like alts are kind of eating, you know, they're kind of eating shit. And in the meantime, like Circle ripped off its IPO, like Coinbase and Hood are doing very well. I'm sure there's plenty other examples, but it's like all of the crypto related equities are going up. And then obviously all the treasury co's, like every time a new treasury co announces like, hey, we bought this amount or we got, you know, we raised this much money, we're going to buy Bitcoin, stick it on the treasury balance, then the share price rips. So I don't know, man. I think part of it is people are sitting around in their altcoin holdings and kind of feeling sad and seeing all these equities just running up.
Yeah, definitely. I mean, it's definitely a broader kind of overall crypto market structure thing that, you know, people have kind of been harping on for, I don't know, you know, a year, 2 years now, like about alts. And I don't know, like you look at, again, like outside of BTC and hype, like it kind of seems like the past week, 2 weeks, like sentiment, positioning, everything, like, you know, you just scroll CT, like, and you would think that people are, you know, just printing, everything's ripping. And then, you know, I was looking at the charts this morning and like from the Middle East escalation on June 11th, pretty much everything is down 5 to 10% plus still. Like, I think people are just so desperate for like, I don't know, just for alts and green candles. And it's just like, I don't know, there's some weird kind of sentiment, like, I don't know. I'm still trying to work through what that means, but I was just looking this morning and I was just like, literally since June 11th, you know, the Middle East escalation stuff is, you know, still down, but you look at the conversations and chats and on CT, and again, like you would assume that, you know, stuff is up 30% from the lows. And, you know, it's bounced pretty hard from the lows, but it's still, you know, trading below where it was 3 weeks ago. So it's really I don't know. I mean, that was a lot of conversation at permissionless too. It's just like nobody really wants to hold alts, you know. It's kind of like everybody's in BTC and hype, and like that's fine. And those are, I mean, those are good coins. Like I'm not really interested in necessarily selling some of those. I sold a little hype the other day, but like alts, I don't know, man. It's just it's brutal out there.
Basically everyone I talk to at permissionless is in the same 5 coins. And on CT, I feel like I see alt season calls like everywhere in the past like week or so. And it's insane. And every single time people call for alt season, it doesn't happen. It's the same 5 coins that go up. Yeah, I don't know. It feels like some
ETH BTC bottom.
Yeah, exactly. ETH, BTC, forever bottom. Someone said that on our morning call today. The forever bottom for ETH, BTC.
Oh no.
Name and shame.
That's terrifying. Yeah, that's terrifying.
Can't do that. But yeah, I mean, it feels like a lot of the same patterns repeating themselves. And then, yeah, the sentiment is kind of weird though. Like people do seem euphoric or like super bullish. For some weird reason, you'd expect the prices to be, at least of alts, like much higher than they are.
Yeah, I mean, we've had the continuation of the dispersion, right? Like, I think that's been a part of the conversation for the past, year and a half, 2 years now. Is just like there's way more coins and alts and tokens and meme coins then like could possibly be held up in the same way as like the market went up in 2021. And I do think a large portion of, people in this space are probably still indexing, even if subconsciously, to the market like performance of 2020 and 2021. And it's just not possible to like necessarily replicate that in the same way, but especially when you have like, you went from maybe thousands of coins or tokens to like literally millions of them now. Propping up and having like all alts go up is just like a thing that's not possible.
Yeah.
Plus
It's also,
revenue meta.
I mean, it's another thing we talked. Oh yeah, yeah, for revenue meta. God forbid you would want something to make money. But yeah, I mean, it's just another thing, talked about a lot last week. It's just like it's also just the natural maturation of the market that's been around for, 13, 14 years now. Like obviously the alt market has been, I don't know, really since like 2020, but I don't know, it's just kind of a thing that happens in markets. Like there's no, I don't know, like I think it's broadly healthy for the overall general market. Um, but it doesn't necessarily make people happy, especially people, sitting in alts. But yeah, like I said, overall, like I just think it's the maturation of the market, it's the evolution of the market, and it's probably good. And I know people don't necessarily want to hear that. Um, but for the space, like, it's just where it was headed long term if it was going to be, institutionalized and adopted.
I forget who, but somebody said something to me the other day or a couple of days ago that I thought was really relevant to this point, pretty funny. And it was just, I think it was related to the bringing stocks on chain thing. And the conversation was about like, how do they redeem? Like, do you actually, have ownership to the underlying or what have you? And the end of that conversation was kind of like, no, none of that really matters. Like, people, they just want to get exposure, and like the details are important, but it's not like really central to the point so much. And they're kind of like, so this is just like, again, like back end tech, like that's not that cool anymore. And it's like, yeah, man, that's what it is. It's just, you put some stuff on chain. It's just the rails to facilitate it. It's like, when you think of it that way, it's really not that exciting. How much money does it generate for you? And what should that be worth? That's kind of where we're at. I think some people are upset by that because they thought like, future of finance, $100 billion, send it to the frickin' moon. And the reality is just like a little more simple than that. Cool. If anyone has any very insightful takes, I'll take them right now. But I think we can close out. I thought that was a good conversation, and get everybody some rest before the 4th of July tomorrow.
Later, guys.
Yeah, no, yeah, I got nothing to close on. I mean, yeah, everybody have a good weekend. Enjoy the holiday weekend. Yeah, try not to look at charts too much.
All right, stay off the charts, touch some grass, go have some fun. For all the Americans out there, July 4th tomorrow, don't get seriously injured if you're playing with fireworks or anything like that. Be safe. And we will see you all next week. Thanks for coming on, guys, and thanks for tuning in, everyone.